Welcome to Trading Lounge and the Asian Report for the 13th of March, and starting with the ASX here, we'll also look at the Nifty. The ASX here, we can count 5 waves from the low here in terms of 1 and 2 and 3 and 4 here, and then all the way up for 5 here. So we were looking for an A and a B and a C. And that can still be the case, but we've got a little bit of a problem with the move down through here, not so much with this market, but with the US market. So with the US market, if I can just bring that across here for a moment, let's just take this to the 4-hour chart here first, so we can just have a bit of a closer look at this move down through here. So if we look at the S&P 500 that's moved up overnight and yesterday, so the move down through here yesterday for the, not so much yesterday, over the last few days, we were looking down through here, we're looking at, we thought we may get 5 waves down here, but we didn't have that evidence in terms of 1 and 2 here and 3 here and 4 here and then 5 here. So I also understood too that we only had 3 waves here and we had to get 4 and 5 here, and then if we'd had the 5 waves, then we would have had an A and a B and a C wave here and then gone down from there. But we didn't get the 5 waves here, we only got 3, which means it can still be a correction just clean this up a little bit. Yeah, the move down can still be a larger correction, but it's a bullish correction because it's in 3 waves. So we could have looked at it like this here in terms of an A wave here, a B wave over here, and a C wave down here, making it corrective and making not a top in play here, because there would still be further upside to come even after this wave here. So what's happened here now is that the current move up through here has got a very strong case of being 5 waves. Now, if we've got 5 waves here, that means that we're going to get 3 waves here and then another 5 waves up here, and then a correction and then another 5. So another whole impulse section going up here. So if that's going to be the case for this market, where does that leave the other global markets around the world? Obviously, the UK have got their Parliament things today, so that's all a little bit messy there, but for the Australian markets, we'd need to look at a bullish count here. So I do have a bullish count for the S&P. I'm not going to go into that at the moment, but I just want to point out that this move down here only ended up being 3 waves, and now it appears that we've got 5 waves here, so we can look for a correction and then a move up through here. So that would put the Australian market also into a bullish mode as well. So we need to have a bit of strategy here, especially for the reasons that we have short trades on here. So the Australian market doesn't have to do what the US market does. We've seen it do different things before, but it certainly brings up a bit of a flag, doesn't it? It means that, well, at what point, if we're shorting here, which we are, what point, do we protect ourselves here? So this is what we need to go over. So first of all, if I don't have a bullish count here with this move up through here, how can, if this market does turn up from these lows here, what count do we have at that point? Because we've got a clear 1 and 2 and 3 and 4 and 5 here. Well, then we would have to look at this, if the market continued up through here, how could we count this in a different way here? So one of the ways that I've looked at this morning is that depending on what country that you're in, of course, would be like this here. So this is just one way here. So this is pretty much how I've got the US market bullish count as well. So wave 1 here, wave 2 here, and then from wave 2 here, we're going up into wave 3 here. So this would make this now wave 1 here, wave 2 here, and then 5 waves in here for a third wave here, and it would make this the fourth wave here, and then the fifth wave up to 6,500, and then we would see another move higher here, in this case here. So about 6.8, whereas is the old high long ago, all-time high, so that would be testing that at that point there. So this is a real possibility as well, so we need to bring it into the fold, you know, especially if we start to see strength in this market, and we need to talk about our strategy within here, of course. But yeah, and also too, this is the way for this wave 4 here. This is the wave 4 of 1 lesser degree here, but the 38.2% retracement level is quite high here. We've had in this structure from wave 2 to wave 3 here, it's been wave 5 having the extension in it. So normally when we get an extension in this wave here, we won't expect it to pull back to the wave 4 of 1 lesser degree, but normally the top area through here. So 6,100 is certainly a place that we could look for this. So we've got to go on the assumption that Australia can do its own thing and can keep moving down into that bear market that we're looking at, and also we could also look at this coming a little bit further down through here. So let's go in and have a look at this again here. So on the 4-hour chart here, the 38.2% retracement level is here, and if that was the case here, then we would look at this here coming down as wave 1 here, wave 2 here, wave 3, 4 and 5 down to this point. So that could be the end of it there, and we could move up from there, but it could also be in terms of this A wave here, we would just come up to the wave 4 of 1 lesser degree and then move down again through here for the A wave here. So there's a lot going on here for us in this in this market at the moment. So let's just go into the hourly chart here. So with the hourly chart here, we've got it like this. So you may not have gotten this one here. I talked about it, but yeah, and put the line through there, but you may not have got it. But it doesn't matter. You should have these ones in here, or you may even decide to get out from that point. So from this here with our stop here, we obviously need to bring that down into this area through here. So I don't know if we've got wave 1 here, ABC for wave 2 here, and then going down into wave 3. Now if we're going down into wave 3, then all of this move here would be wave 1 here, and wave 2 here would sit here, and in this case here we would look, I'm breaking this down here so we can talk about strategy, but we just need to sort of understand why I'm doing that strategy. So so this here can be 5 waves down to here, and ABC back for wave 2, and then we can have this as wave 3, 4 and 5 here. So this can be if I just copy that for a moment, can be wave C here, or it can be wave 3 here. So that's something that would also need to work out as well when that moves to that point. Okay, so we need to still keep this into play here. If this market currently finds the 6,200 here as the support, then we know that we've got a bullish market in there in that case. So in that instance, we could take this copy this here. I'm just having a look at where this pans out through here first of all. I mean, sitting on, yeah, it's too close. So but we can put that in here anyway, but this being breached here, it still leaves, it's right on the 6.2 anyway, so it doesn't really matter. And also too, if we're going to find, if we're going to go long here, the routine, the market would move up, it would react, and then it would make a new high, and then it would come back and have its little thing, and then it would move up from that point. So going long on any of these highs here would be the right thing to do here. And obviously you can move in through group 1 here, so getting most of the time you'll see some sort of support on the 200 here. So you get your first position there, your next one on 10, on 20, and then you'll wait for 30 to get support. If that gets support, then you're going to get to 50, so you can protect yourself at that point. And you can also add on to 50 and move up from that point. So yes, an A wave, a B wave, and a C wave here, or wave 3. So they're the two counts to the downside. And we know that the move above the 6.2 would negate these two counts here, and we would go straight up from that point. And it's possible that we can have this here as the A wave here, a B wave here, and 5 waves down for the C wave here, and move straight up from here as well. So this is where we need to protect ourselves. So when we look at the tick chart here for a moment, so I can get 5 waves down into this area here, which is wave 1 and 2 here, and 3 to here, and 4 to here, and 5 to here. And that would make this here, I'll just go over this 1 and 2 and 3 and 4 and 5 here for wave 1. And back for wave 2 here, wave 3 just in this little bit here, wave 4 in this one, and wave 5 here for 3, 4, and then 5 waves all the way down here for wave A, or wave 1 here, an A and a B and a C, pulling back up 50%. It's possible that this could be a wave 4, but yeah, it's just another spanner in the works. So this would mean that here, if we rise from here, then this is going to be a problem area through here. It's going to be a problem anyway, because it's got these old highs here and this area through here. So it's all through here is going to be that second problem there. So and that's where it could fail and move back lower again as well. But we have to go long on the 6.2 area through here. So let me just remove that there for a moment. So from the high here down to this low here, I can count 5 waves here. So just 5 in here, 1 and 2, nice strong third wave here, fourth wave here, and I think this is 1 and 2 and 3 here, an A and a B and a C for 4, and down for 5 here, finishing right here, so we can go up from here. So I think that we need to, first of all, this is group 2 here, so we don't want to jump the gun here. So what we can do is that if we get support on top of 72 here, this is group 2, 65, 72 and 80. If that becomes the retested support here, then take part profit on your short trades from that point. And then if this here, if 6.2 finds support, then you need to get out of the trade. Okay, otherwise you'll leave the skin in the game, and we'll be looking for this down here as wave 1, coming all the way down here as wave 1, an A wave here, a B wave here, and a C wave with wave 2. That's right on the 61.8% here, so that's very helpful at that point there. So the 6.2 is a line in the sand. In terms of geometry, it's also, and Fibonacci is also important, because the number 62 really is 61.8%. So it's a real pivot point, this this little area through here. So if we go back to the hourly chart where we basically get our ideas for our trades, we can look at this here in terms of So if we get support on top of 72 here, 6172, then take part profit, and then if support is found on top of 62, and that means that it needs to be support there. So yeah, don't jump the gun on that one. Give it, just relax and give it time. And also too, if the 62 doesn't become the support, then this little ABC pattern up here, you'll have to find it yourself if you can, in 3 waves here, then draw the line across here and look to go short again through there. So that's really it in a nutshell. That will be our strategy, and that will keep us pretty safe at that point, and it'll get us in at the right time. So yeah, all a little bit complicated, but there you go. Okay, let's have a look at the Nifty. Okay, so my original count is wave 3 over here, with an A wave here, a B wave here, and a C wave here for wave 4. Now, it doesn't make this counting up here very, or not, I wouldn't say easy. It's okay to count in a positive light, but the point with it is that it doesn't really look like an impulse wave. It looks more like a corrective wave. So the other point here is, and we can look at how I've counted it in an impulse wave as well, but one of the first things we were always saying here, I was saying, is that from the top here to the low here, the 61.8% is just above the 11,000 there, and now we've breached that there. So we're moving up higher in that space. So it's still okay. I mean, technically, this market can still be a corrective move all the way up, long as it doesn't take that high out. That's the catch-22 with it all. So the market's moving up here to the 78.6, which is simply the square root of 61.8%. So that it can play out like that. So what I've decided to do here is that we are currently long in this market, and we took those highs out here because we had a setup here on this level here. It came back and retested it as support, and then made a new high here. So we went long here. So we've done all the right things, even though the count hasn't really been that helpful with us. So, but at the same time, it still can be corrective as an A wave here, a B wave here, and then 5 waves in a C wave here. So it's going to put us up into 11,500 area through here. So I guess in this case here, we'd move up here anyway. So we're either going to get here and we're going to fail, right? Or the other thing is that we're going to come up to here, we're going to react from here in some way, and then push up through here, and then get support here. And if that's the case, it will be something like that. The market needs to migrate that sentiment and all those orders and the balance of the market from resistance to being support over here. And if that's the case, then we'll be long from there. So we can still stay with this particular count here that we understand, even though we don't understand the bigger count here. We'll understand this count here, and then we just need to be patient. So we will trade up to these points here, to the 11.5 or close to it, and then we just need to chill out and allow the market to do what it needs to do. But we could also look to be going short too, because there's an opportunity for this to to really move down strong at that point. So we wouldn't want to miss it, and we don't want to get trapped and all these sorts of things. So we need to take a balanced view on it. So on the bullish side of things, we can look at it like this here. I would also probably have to go up 1 degree. Where I've got this is a minor degree for 1 here, then I would have to go as an intermediate wave 1 here, and just bring all of these labelings 1 degree higher, including this one here. I'm not sure about that just yet, but it's something that we may have to do. So yes, we could count this up as 1 here and 2 here, and then 1 here, an A wave here, very complicated B wave here, and a C wave here for wave 2, and then we're going up for a third wave here. So the third wave would be strong because it would be, in this case, it would be wave 2 here going up to wave 3, wave 2 going up to wave 3, wave 2 going up to wave 3. So we're looking at the third of the third of the third here, which is the the best Elliott count to trade in a nutshell. So let's just go to the 1 hour chart or something. So yes, where we had the trade. So we were looking at this here. We were looking at it in 2 ways. We were looking to go, if this had become the retested resistance at 11,000 here, we were happy to go short. But also 2 of these tops got taken out, we're happy to go long here. So that's sort of where we are at the moment with this. So one thing that could catch me out here, I don't think it's the case though. It could be. It's possible that this wave 2 that I've got over here, I'll need to check it on some of the other Indian markets, the banking sector and the BSE and so on. So I've got it wave 1 here, an A and a B and a C here. I'm quite happy with that. It's complicated, but it makes wave 4 a little bit more simple in that regard. Yeah, if I count this here as 1 and 2 and 3 and 4 and then 5 up here, we're not going to reach the 11,500 by the looks of it here. But this could also be possible that we have wave 2 coming straight down onto this point here, right? And then we have this as wave 1, an A and a B and a C for wave 2 here, and then this would make all of this here just wave 3 up here. So if I just copy this for a moment, it's just something I need to check out, that's all. And I think it's okay to sort of share concerns and things. So yeah, so it's possible that this can be 1 and 2 and 3 and 4 and 5 here just for the third wave, and then we would have the fourth wave here and then the fifth wave up here for that particular structure there. So I'll just put that there for the time being, and it just means it's really just for me to do some homework on that. So let's just look at this a little bit more here. I mean, it wouldn't hurt to take part profit here just in case. And let's just see what occurs here in this space here, because the other point here too is that this is number 3 here, which is group 1, so 1, 2 and 3. So we know that if we get the arrival and the reaction, which is the arrival and the reaction, this is the first high above the level here, which is not finished. It looks like it can pop up here a bit further. So that first high above the level, then we'll have an A and a B and a C wave here. So it's really at this point here that if that becomes the support, then we can go long, and then we'll move up into the 11,500. That 78.6 runs in somewhere around here somewhere, but we'll keep an eye on the count itself as we move into that particular space there. So yeah, I'll keep the wider stop, but we'll take part profit here. Or for your part profit here, what you could do is just keep a 50% stop just under this level here, and then just roll it up there in one way or another, use a trend line through here or something, and while it's above that trend line, say, then keep that, don't get out at that particular point. So you can do your own thing and refine it. It just depends if you've got the time to look at the market. I mean, I'd just rather get in get out and use my time to do other things. But if it's the be end and end all there for you, we'll then put a bit more time into refining the situation. All right, I'm just going to leave it at that. Thanks for tuning in. Cheers.